What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Linder, and today is Monday. This is Bitcoin Fundamentals Report Day. It's my free weekly newsletter that goes out every Monday. So we are going to do a live read through and a discussion of that. So let's just jump right into it. I will share the screen. Before we jump into that, let's go to bmpro.substack.com. I write over there several pieces a week. There's some really good high signal over here on BM Pro, looking at all sorts of different metrics and things, investor insights based on actual data from the network and the stock market for public Bitcoin miners. All sorts of stuff over there on bmpro.substack.com. So check that out. Okay. This is my website, personal website, bitcoinandmarkets.com. All my stuff comes out here, and this is where you'll find the free weekly newsletter. You just subscribe free. It goes in your email. There's no spam or anything that goes along with this. You can also sign up to support my work over here. Appreciate everybody that does support. So, Bitcoin Fundamentals Report number 288. I always start out with a meme or a cover image. I just made this up. I asked ChatGPT. I fed it all my raw, the whole blog post basically, and said, hey, make me an image that represents this blog post. And this is what it kicked out. So kind of like it. All right. Snapshot of Bitcoin. Weekly trend. Something is about to happen. It's been extremely slow. We'll cover how slow it's been. Things are going on underneath the surface, of course, but the price is so flat that it just seems like something is about to happen. We're coming up on some crucial points on the chart as well. So if something's going to happen, it's going to happen this week or next. And things can kind of get out of control because there's a lot of pent up supply crunch. There's a lot of pent up demand. And I think once this gets, starts ticking over some of these points on the chart, it could just get out of hand very, very quickly. And let me just check my levels here. Okay, I'm going out there. Let me make sure I'm not muted on Telegram. Nope, we're all good to go. Okay. Media sentiment is neutral. There is a battle going on between the globalists and the banksters, and it's starting to spill over into Congress, which is pretty interesting. We'll cover that. Network traffic is back to normal. However, the mining industry is being squeezed right now. It took a little while for them to really get affected by the halving because they had all those high fees. The high fees plus the halving happened towards the end of the month in the second half of April. And so, when I was looking into their April production numbers for all the miners, they really didn't look all that different. Some of them were actually, 90 to 95% of March totals in April. So they really didn't feel the halving very much in April. And now in May, they're starting to feel it. And we're starting to see some of the fallout from the halving on the miners. But we will talk about that a little bit more. Weekly price at the time of writing, 62,783. That is less than $200 down, 0.3% negative. Really, really flat. And I did miss last week the fundamentals report. I was out of town. And so this is 2 weeks difference. So this is since the last issue. And since the last issue, we're right there at the exact same level. That's how flat price has been. Market cap is still 1.2 trillion. Satoshis per dollar, 15.95. One Finny, that's my preferred denomination of Bitcoin, $6.27. Previous difficulty adjustment was last week, went down 5.6%. That's the largest difficulty decline in over a year, but nothing out of the ordinary. I mean, I've seen multiple double-digit negative adjustments. So negative 5% is not anything that's screaming, hey, there's big-time problems. I mean, we lived through the Bitcoin miners getting kicked out of China. And, if the miners can survive that, they can survive a halving with the price at 65,000. There's just a little blip in the difficulty here. Next estimated adjustment, though, is right now is positive, and it's 9 days away. Mempool, 230 megabytes. We'll take a look at that down below. Fees for the next block, $1.30 cents or roughly 15 sats per virtual byte. And the low priority fee, you can save yourself about 20 cents if you don't care when it gets approved, or I mean, not approved, but confirmed, ordered in the block. Lightning Network. Now, this is interesting. Capacity is up again. It was on the last issue as well. So it is continuing, the capacity is continuing to go higher, which is interesting. But the channels are continuing to go lower. So there is a little bit of centralization going on the Lightning Network. We will see what happens when price really pumps, and this BTC is now worth a lot more. You know, when the BTC doubles, the price of Bitcoin doubles, that capacity in the Lightning Network goes from 100 million to 200 million to 300 million. And at 300 million, 400 million, 500 million, it starts becoming very attractive to retail, especially online payments. And so there's just a lot more liquidity to go around. We could keep the same amount of capacity in Lightning Network, and it comes out to be, you know, billions of dollars of liquidity on the Lightning Network. So you could think of it that way. All right, that is all for the snapshot. In case you missed it, I did have my Bitcoin Magazine Pro stuff come out last week. All right, let's go to the headlines. So extremely slow market. I skipped last week's newsletter due to travel, but we didn't miss much. The Bitcoin space has been very quiet. There are some major rumblings under the surface in the halls of Congress and behind the scenes with 13F filings showing large players taking positions in ETFs. Something is going to happen soon. Time to pay attention. And I was showing this to Telegram before we got started, but you can see that orange line was the price at the halving, and we're only 0.5% below that. So that's like very, very sideways and very boring. The 50-day moving average is still above us, but we will talk more about the price in the price section. Okay, U.S. House advances bill to allow financial firms to hold Bitcoin. So in Staff Accounting Bulletin number 121, in very strange guidance, the SEC effectively cut banks' ability to custody Bitcoin. Congress has now taken up the matter and has passed a measure in the House that would rescind this guidance. It is expected to pass the Senate relatively quickly as well. This will open the floodgates to banks' involvement in Bitcoin. So the reason why it's expected to pass relatively quickly is because, like, new laws and stuff, a lot of times have to have the 60 votes in the Senate. This is just some sort of policy, so you know, like a recommendation or policy measure reprimanding the SEC. So this would only needs 51 votes in the Senate. And most likely, since there were 21 Democrats in the House that voted for this, it has bipartisan support. So most likely it will pass the Senate. Now, Biden has said that he will veto it. So this is from Watcher Guru. I just took a little blurb from here. The U.S. House voted to overturn a bill that prevents financial firms from acting as custodians for Bitcoin. Don't want to say that. With a new bill. The proposed legislation would overturn the SEC's Staff Accounting Bulletin number 121. This bulletin imposes restrictions on financial institutions regarding the custody of digital assets. Okay. The measure will now go to the Senate for review. However, the endpoint of the executive office has already made known its decision on the proposed pro-Bitcoin bill. Early Wednesday, President Joe Biden said that he would veto the potential bill to overturn the SEC's, quote, the administration strongly opposes passage of this work to protect investors in Bitcoin asset markets and to safeguard the broader financial system. Okay, but this is bipartisan support. And what's interesting is Bitcoin is becoming a hot button issue for this campaign. Millions of people own Bitcoin in the United States. And, you know, it's not 100 million, but it's getting close. I would say people in the United States that own Bitcoin and related assets would be, I don't know, at least 25 to 50 million people. And now that the ETFs are coming out, large institutions, large pools of capital are now vested in the future of Bitcoin. And a lot of this clearly goes against other precedent. So if I have that up? Let me just click on this and I'll go to this source here. Click. Let's go. We're still on this tab. Okay. So this one didn't actually have it in there. I was reading another one, I think, on Newsweek. But anyway, they were quoting Powell, and Powell's like, I don't think specifically in regards to this particular bill, but it was in regards to just banks and assets and where they carry these things. So they want to force banks to carry these Bitcoin custodial Bitcoins on their in their assets on their balance sheet instead of off balance sheet. But if something's in an allocated account, it's not actually part of the bank's balance sheet because they're just holding it for you, right? It's an allocated account. And so it would be highly unusual for banks to have to carry Bitcoin as assets on their balance sheet instead of off balance sheet, like all other of these allocated accounts. So that's kind of the back and forth that's going on. And you can see that President Joe Biden and people like Elizabeth Warren, they are strictly in the globalist camp. Okay. So they lost on the Bitcoin ETFs. They got approved. Now they're trying to use extra legal regulatory loopholes to enforce an anti-Bitcoin stance. And you could read that as saying it's illegal. They will lose. The bankers are on our side in this fight, and you can clearly see the bipartisan support of this bill. So if there's bipartisan support, banks, they donate to Democrats and Republicans. And this bill has bipartisan support pushed through by the banks. They want this. They want Bitcoin to succeed now. Everybody's starting to own Bitcoin. And so, we can clearly see that the globalists are trying to push this to lock this down, even though they're losing. They lost the ETF. They're going to lose this as well. Okay, it's the first Bitcoin election. I don't agree with everything Balaji says, but this is pretty spot on. 2024 will be the first Bitcoin election. Trump has come out and said, if you like Bitcoin, I think he actually said the C word, but if you like Bitcoin, you have to vote for him. This is parallel by Pocahontas Warren and the globalist elites trying to take Bitcoin down. I personally don't vote. Living in Florida now, my vote wouldn't sway things either way, but I try to have an objective view. So one of the things is if I vote a certain way, then that would cloud, I think, my judgment of these events. What I see happening right now is Trump is running away with the election. Some polls have him up by 10%, and every hypocritical trick they play against him, his poll numbers go up. That is very good for Bitcoin. So here's Balaji saying that 2016 was the first Twitter election. 2024 is the first Bitcoin election. And here we see Trump coming out and being pro-Bitcoin. Very important. All right, moving on to the next story. David Bailey, CEO of BTC Media, the owner, operator of Bitcoin Magazine, he has been tweeting up a storm over the last 24 hours. But he said that in the past month, he's been working with the Trump campaign, speaking of the Trump campaign up here, to develop a Bitcoin policy agenda. We proposed a comprehensive executive order on day one, and we'll be sharing those details soon. Okay, we intend to raise a $100 million war chest for the campaign to ensure the next president of the U.S. is pro-Bitcoin. All right, well, you say pro-Bitcoin, and then you say Bitcoin and crypto up here. But anyways, this is interesting to ensure the next president. I mean, what happened to RFK? RFK, they're up here in this one here. Robert F. Kennedy was speaking at the Bitcoin conference down in Miami last year, along with Vivek, and they were all pro-Bitcoin. And Bitcoin Magazine was really riding RFK Jr. hard, and now they are doing this with Trump. So we will see how this turns out, but I thought this was interesting. Of course, Bitcoin, like I'm saying, under the surface, things are really happening. It's just not being represented in the charts yet. All right. John Seth leaks audio with scammer. Okay, so John Seth, he is a legend in the space. I've learned a lot from him over the years. He recently released an audio recording of him talking to a teenage scammer who's tricking people into giving their private key. It's an informative listen. So anyway, I linked to that in the bullet point here. If you haven't checked that out, I recommend you guys checking that out. Okay, next headline. Major institutions reveal significant stakes in BlackRock IBIT ahead of 13F filing deadline. This is linked to cryptoslate.com, so you guys can check out this article here. But here is a table from the SEC's website. You can see Q1 2024. So that's people that bought the ETF in that initial surge, right, of buying. They have to file these 13Fs by Wednesday, this Wednesday, May 15th. Lots of people are coming out. So according to the latest 13F, my dyslexia, 13F filings, Symmetry Investments with a $61.5 million holding, Rubric Capital with $69 million, and Bracebridge Capital, now the largest IBIT holder with over 100 million invested in shares, have all disclosed their positions, as well as BlackRock has said that they have about $10 million. There's others, a slew of them, probably 20 or 30 that have come out and said they're like this. So these are large pools of capital being invested into Bitcoin, directly interested, vested in the success of Bitcoin. And again, this is BlackRock, don't forget. BlackRock, Vanguard hasn't jumped on board, but BlackRock has. One of the most powerful institutions in the world is now vested in Bitcoin. Interestingly, Bracebridge's position is offset by a complex set of options valued at over 270 million. A mix of calls and puts were placed, creating a complex delta neutral combo trade that combines elements of a strangle and a straddle with a bullish bias for extra long calls. So I'm not an expert here, but I do kind of understand how these complex positions work. And basically they are risk neutral, except for big time gains. So if Bitcoin doubles, they're going to make a lot. But until Bitcoin goes really, really bullish, so extra with their bullish bias for extra long calls, until Bitcoin goes up by a lot, they are going to be relatively neutral. So they are hedging the high side on this, which is interesting, the way you can design these different types of strategies. It will profit most if IBIT stages a large rally, but the long puts provide some downside protection. The share purchase helps to hedge the delta and theta of the options. Okay, well, that's just from the article. Moving on to the crypto headlines. I'm trying to go fast through this because I do have an appointment. Let me check the chat here real quick. Dex Invictus back with us. What's up? Disclosure Crypto. Hey, buddy. Gari Network. Don't know what that is. It's a Web3 streaming platform on Solana. I don't deal with altcoins and definitely not Solana. So I could touch on like Ethereum that is crashing against Bitcoin, but I don't. This channel doesn't do anything with shitcoins. It is strictly a Bitcoin channel. Unless we can learn from it, we're not going to dig into whether something is a good investment or not. Okay, let me check out Telegram, see if there's any comments from you guys in there. Nope, nothing. All right, let's move on. Let's keep the flow going and go to the macro headlines. SLOOS data release. So this is the Senior Loan Officer Opinion Survey on bank lending practices. This is probably one of the most important things that the Fed publishes. It's much more important than M2. Okay. A lot of people think about M2, the money supply. Look at all this M2 that's been created, blah, blah, blah. M2 does not measure money. It is a fraction of what money is. Money is rehypothecated. It's chains of collateral. It's cash equivalents. It's a shadow banking system. It's global everywhere. Only about 30 to 40% of it is in the United States. The rest is abroad in the foreign shadow banking system. So we don't really know the extent of the money supply, but we do know what the character of money is today, and that is credit-based money. So if we look at the Senior Loan Officer Survey about lending practices, that is credit practices. We can get an idea of what is going on with the money supply in the shadow banking system, in the broader global financial system, if we look at lending practices. Okay. And the SLOOS data also encompasses some foreign surveys. They don't have as much reach there. It's mainly US banks, but they do have foreign banks that also respond to this survey as well. So it's a broad spectrum. It's one of the best measures we have for the supply of money. It's released quarterly, tells us about lending standards and demand for loans from customers. Since we are in a credit-based system, blah, blah, blah. On the first two charts below, you can see standards and demand for commercial and industrial loans. Standards are tightening and demand is falling. This is a recipe for declining economic activity. Actually, the declining economic activity is what is causing this, because the way the system is set up, it's not that the money supply increases and that causes something in the economy. Okay, it's the other way around. Something happens in the economy and that causes a change in the supply of loans, in the supply of money. So, no, these are cumulative. So kind of like the PMIs, above or below 50. If it's below 50, it's contracting. So if we come in at, say, a 45 on manufacturing PMI, and the next month we come in at 45 again, it's not level. It actually decreased another amount, because 50 would be level from month to month. So if we got a 45 and then a 50, that would mean we didn't change. But a 45 and a 45 means we changed. We continued to decelerate. So on this survey, it's the same. Anything above the midline is tightening standards on net. So if 60-40, right? If 60% of banks are tightening and 40% are loosening, then the net would be 20% tightening. Okay, so this is what we see here. And from the January survey to now, if I can make this bigger, I don't know, can I zoom in and make it bigger? A little bit. Okay. You can see it actually went back up a little bit, just this little tweak. So this black line would be January's, and this is now April's, and it went up slightly. So they're tightening a little bit more than they were tightening, but they're still tightening. All this area above zero is tightening, and all this area below zero is loosening standards. Okay. Well, what about demand? We're told that as interest rates fall, demand goes up, right? Well, that's not the case. The reason why interest rates fall is because demand is falling. So demand is falling. And same thing, it kind of reaccelerated a little bit. So this is a deflationary setup. This means that money is contracting in the shadow banking system and in the system in general. So let me zoom back out a little bit. Okay. The next two are commercial real estate loans. The same story here. Both supply and demand are falling. There's literally no way this leads to reacceleration of inflation. Lending continues to tighten. The economy continues to be squeezed on the money side. And one of the places we see this is in Japan. We see this globally in China. The economy is being squeezed. In Germany, the economy is being squeezed. It just hasn't quite made it here. And remember, this is a global financial system. And yes, this is mainly US banks, but there's a dollar squeeze happening everywhere, and foreign countries are going to be hit first by this. So here is the standards. You can see still tightening above zero. So it's still tightening. And you can see in recessions, it always tightens, right? And it always leads to a deflationary outcome where supply of money is shrinking. I don't know what will happen to prices per se. The same here with the demand. Okay, demand is shrinking. Now, that's crazy to say that I don't know what's going to happen to prices, but I mean, we had a long talk on this on Telegram. Well, not a long talk, but we talked about it a little bit. That globalization. So Lynn Alden had a tweet, and they were talking about globalization and how that caused prices to go down and to hollow out our manufacturing sector. But that was an inflationary episode. Okay. That was an era of inflation. There was high returns on new debt. Yes, it was relatively saturated in the United States and in developed markets. So what they do, they went and they applied credit into emerging markets, into China, and they got a much higher growth out of that debt. So the debt grew. So what is money? Money is debt. Debt grew substantially. If you look at the total amount of debt in the world, it went gangbusters from 1971 to 2008. Okay, that was an inflationary era, yet prices went down because of economies of scale and efficiencies and cost savings. So we don't know exactly what's going to happen in a deflationary era where credit is being depressed. Most likely prices will go up because we won't have as many economies of scale. We won't have cheap foreign labor. So we'll have fewer amount of products, but we'll also have higher prices for the products that we have. And that is a deflationary outcome. So prices don't really come into this. But speaking of prices, let's talk about CPI. CPI is coming out this week. And the Atlanta Fed, their inflation now has April, if you can see April, 0.4% is their forecast. May, though, is looking at 0.1%. So the forecasts are dispersed around roughly 0.4% month over month. I'm always expecting downside miss, and I think the market is primed for one right now. The slowness of Bitcoin and macro in general will spike if we get a miss to the downside. And I mentioned this on Telegram as well. So the GameStop stuff that happened today, that's because everyone's waiting for something to happen. And this guy came back to Twitter, really didn't do anything. I think he posted a little video of some mountain or beach drive, like along what's that? What's the highway that goes up the West Coast? Anyways, I think he just posted a video like that, but his return made GameStop pump 100%. Okay. Because people are waiting. People are waiting for something. And if there's a big miss to CPI, let's say CPI comes in at 0.2% on Wednesday, people are going to be all over that. It's going to cause a massive rally. Okay, with a downside miss, people will think the Fed has room to cut rates now. In the last meeting, they committed to reducing the rate of QE in June. Perhaps they will also cut rates at that meeting. The market would interpret this as very bullish easing from the Fed, when in reality, it's confirming downside risk. So again, it's reversed. If the economy were robust, the Fed would not need to look for opportunities to cut rates. So far, Powell has done an exceptional job. And I know that's taboo to say in the Bitcoin community, but that's what you get here on Bitcoin markets. Honest, real, accurate talk about Bitcoin and about macro. But by doing so little, he's doing so much. So he raised rates and then held rates there. And he's like, we're just waiting on more information for 10 months now. And the market is going higher. Okay. So that's my talk on CPI. I will probably live stream that if I am available. Okay, next topic. More people are starting to talk about demographics. And I talk about this a lot on the show. You guys know. So the UN typically publishes fertility rates each year, but they are behind publishing 2022 and 2023. I wonder why that would be. Researchers are starting to put their own numbers together. So they go out there and get official data from the countries themselves, and they compile it using a similar methodology to what the UN would do if they would publish their damn findings. But so these independent researchers are doing this, and it's not pretty. With data from about half of the world, countries are missing previous UN estimates by 10 to 20%. For instance, China had 16% fewer babies last year than the UN projection. And the UN projection is for a rapid decline in the amount of babies. And China had 16% fewer than the rapid decline numbers of the UN. Things are getting worse, faster and faster. And this is from the Wall Street Journal. So people are paying attention to this. And I just have to say, like in a credit-based system, shrinking demographics like this, that's getting worse and faster, it is going to completely negate any possibility of a re-blowing of the bubble, a reinflation of the bubble. It cannot happen. The path forward for credit is shrinking the credit bubble. The only way out of this for these countries is to do some drastic change. I mean, they had to do drastic change on the social front to get their fertility rates up, but also drastic change from a monetary perspective. They will go back to commodity money because credit money just won't work anymore. So that's what we got. All right, let's go on to price. Sorry, guys, I'm kind of go through here kind of fast because I do have that appointment, like I said, but let me take a look at some of the Dex Invictus. Straightforward shooter Powell. Straight shooter Powell. Yeah, obviously you've been listening to my stuff for a while, and that's the conclusion that CK and I came to. I mean, I'm not super familiar with all the old Fed chairmen, but I do remember watching some Alan Greenspan. I remember watching Bernanke and Janet Yellen, and now Powell. And he is kind of like the grandpa of the whole thing. He is the most straight shooter out of all of them. And it's I'm not saying that we need to have a Federal Reserve. It would be best if we didn't have a Federal Reserve, but that we do have the Federal Reserve. I mean, Powell is probably the best person we could have in there at this time. Just like Gensler, I think, is the best person we could have had at the SEC at this time right now, because he's pushing back on all of the scams. He's rightly labeling everything an unregistered security. And we have been saying that from the very beginning of all of this crypto madness. They are all unregistered securities. You can go back on my YouTube channel that has been deleted. I'm on my second YouTube channel, but you can go back on my podcast and listen to how we talked about these things back in 2016, 2017, when all these projects, all these ICOs were launching, just the Cambrian explosion of quote unquote crypto. And we were saying it back then. These are scams. These will never work as marketed. They will never work. They're just an affinity scam. They're unregistered securities. They're all centralized. And what has happened? Everything we said back then is true, and it's come true, and it's going to continue to be true. So Powell is right in cracking down on this. He's also right in allowing a Bitcoin ETF. He walked that fine line. I think when we look back in history, depends on how this all falls out, or shakes out. But I think Powell and Gensler are going to be looked back as being very pivotal in the early major adoption phase of Bitcoin. So anyways, that's all I got to say about that. Okay, Bitcoin charts. Very little has changed over the last, over the week. Changed over the week off last week. Man, that was worded confusingly. Price has been sideways, and most of the indicators are bullish. Last issue, I wrote only down 1% since halving 10 days ago, and now price is only down 0.5% since the halving. So I think the last issue was like right around here, maybe, or like right here on this chart, if you can see that. And we have just been sideways. Little has changed in those 2 weeks other than living through significant negative flows for the ETF, FUD, and stacking sats. So here is that image, the halving right there. Bam. We are flat. It's hard to write anything about price at this point because it's been so flat. Important levels held, little downward pressure on price. All signs are a move higher is coming soon. Here's the weekly 200-week MA held up. And we are in this nice bull flag. I mean, almost textbook bull flag or pennant. And, we're going higher. It's just a matter of when we start this. An update on the short-term hodler realized price. We've touched on that multiple times. And I was like, oh, man, this is the level that we have to hold. And we didn't quite hold it perfectly, you can see. But we did bounce right after breaking it, and it didn't lead to a significant sell-off event. So back here, similar, it held up the price. Here, we did have a 10% dip back here in, what is this, August, I think, that it dipped here 10%. but it quickly regained it and went higher. So, if we lose it, I just don't see much downside pressure on the price, even if we do break it again. Last issue, I said there is an area of liquidity down at 50,000, but that is so far down and not a lot of liquidity to get down there, like liquidations in a cascade. So the heat map is still favoring up to 68,000 here. So this green is where the liquidity is, or yellow and green. And as we break through some of these little yellow spots over here, this cascades up. So we break this, boom, we get hit this one. Boom, we hit this one. Okay, so this is more of what we will see price do, in my opinion, is chase this. There's not a lot below the price to drag price down for it to find liquidity, because the price is looking for liquidity to clear the market. So last issue, I said overall, I think price is likely to continue consolidation. So remember, this is 2 weeks ago now. Price is likely to continue consolidation until we get some higher highs and higher lows. Risk of a brief sell-off is slightly elevated, only slightly elevated. The important high to breach for continued momentum higher is the 50-day at 67,000. The only thing that has changed from 2 weeks ago is that the 50-day moving average is now at 65.5. Okay. And we finally do have a higher low. So we had lower lows and lower highs. I mean, I guess this one technically was a higher high, but not really. I mean, it's pretty much even. It depends if we call this little upward day a high. No, I would count this the high, this the high. So we still have lower highs and had lower lows until just this last couple days. We had a higher low. So next would be a higher high. A higher high would put us above the 50-day moving average and starts, going through that liquidity that's up there for all the liquidations, pulling price higher and higher. So there we go. Once we break the 50-day moving average, price should rapidly hit 68,000. That will be the true resistance, in my opinion, kind of like the true level, bullish, bearish. If price can make it to 70,000, price movements could be explosive to the upside. 78,000 by end of next week is not out of the question if we break 68,000 this week. So those are my thoughts on price. Of course, I do have this premium newsletter. I have been remiss on getting some of those out. Sorry about that, guys, but I will be getting out some more premium content, so check those out. Okay, continuing down. Bitcoin mining headlines. Clean Spark to acquire 75 megawatts of Bitcoin mining site in Wyoming, 2 different sites in Wyoming for $18 million in cash. I think they paid cash. So America's Bitcoin miner, they trademarked this because this came right off of a prnewswire.com. So they trademarked America's Bitcoin miner. I think that's hilarious. Today announced it has entered into definitive agreements to acquire 2 Bitcoin mining locations in Wyoming. Okay, cash payment. The agreement is anticipated to close in 45 days, and sites are expected to add over 4 exahash per second once fully operational. The company plans to break ground on new facilities shortly after closing. The company plans to deploy a combination, the agreement includes the potential to expand the sites by an additional 55 megawatts. Combined, the 2 facilities would offer 4 exahash per second to CleanSpark's hash rate. As the company continues its path of sustained progress toward a 50 exahash per second. So CleanSpark currently has 17 exahash. So 7 is a significant number that won't be added right away. But, they have plans to continue to upgrade, and this is what miners are looking at. So big jump for them. Check out CleanSpark. Okay, Bitcoin miner Bitfarms fires interim CEO early after exec files a $27 million lawsuit. So there's some bad stuff going on here at Bitfarms. So quoting from the article, Bitfarms Limited said it had fired its outgoing interim president and chief executive officer after the executive filed a lawsuit against the Bitcoin miner. Like, why put crypto here? This is, oh my God, dude. This is legitimately a Bitcoin mining company, but these people put crypto miner. It's ignorance, but it's also could not be ignorance. It could be actual maliciousness to tie these two things together. And you just heard my rant. These two things are not the same. Bitcoin is not crypto. Crypto is not Bitcoin. Claiming $27 million in damages for breach of contract amongst other issues. Jeffrey Morphy was appointed to both positions in late 2022, was announced on March 25th to be leaving the Toronto-based company pending a search for his replacement. Morphy has now been terminated effective immediately and no longer serves as the director of the company, Bitfarms said in a statement on Monday. Morphy filed a claim against Bitfarms in the Superior Court of Ontario on Friday, the company said, requesting a payout for an alleged breach of contract, wrongful dismissal, and aggravated and punitive damages. Quote, the company believes the claims are without merit and intends to defend itself vigorously. Excuse me, Bitfarms said. And Morphy did not respond to a request. Okay. So good things happening, but bad things happening. More money, more problems. These companies are getting really big. There could be some snakes in the grass. You know how it goes when you have startup companies and then you find success and you're moving forward. And maybe some of those early people that you started doing business with were less quality than you would have hoped. And there's going to be problems like this in a growing industry. So, on top of Bitcoin is going to attract people that might not have the best intentions for a company just because they see Bitcoin as a way to, obviously make more money and get into a growing industry. So anyways, that's that. Hash rate difficulty. Hash rate hits a new all-time high briefly before falling. You can see over here, hit a new all-time high just after the halving, and it has gone down. That was driven, by fees, making it profitable for pretty much every single hash rate possible to come online. And then boom, it disappeared. So it resulted in the largest decrease in difficulty since 2022, negative 5.6%. So far, in the current difficulty epoch, blocks are slightly ahead of schedule and estimated for a difficulty increase in 9 days of 1 to 2%. All right. Mempool fees have come way down, with miners chewing through the mempool. The last of Okay, what did I mean here? The last of a growing fees signals that a chance to sell. Okay, so higher, like when we have these big fees, that's price insensitive. People are panicking. They're trying to get their Bitcoins to exchanges or whatever. They're trying to move them and sell them and all this. Makes them price insensitive. This panic. That should mean there's volatility coming. But when we have a period like this where it's chewing through and there's really no sign at all of any sort of growing fees, they're declining right now. That is not a sign that there is imminent volatility. It's actually the opposite, right? So that's what I had to say about the mempool. Okay, last section, layer 2, including token protocols. Before I do that, let me check and see what you guys are talking about because I got to get going here. Sorry, I am on a big time crunch today. So both inscriptions and runes transactions have fallen off a cliff. So you can see these runes in pink they're tiny, only like 50,000 a day. You can't even see the BRC20 or the ordinals anymore, not like back here. So pretty much everything has dried up. There is very, very little demand. Slow news cycle and halving has died down, and this has left this subculture at a total loss. They depend on hype and for demand, and specifically, they leech off Bitcoin's hype. They have to wait and see when demand comes back, if demand comes back when Bitcoin pumps. Inscriptions and runes both zero volume. Okay, last thing here is Liquid gets this CMSTR. I'm not promoting this product. I just thought it was interesting, so it's not financial advice. This is a token on Liquid and it's tradable 24/7, 365. It's 100 shares of MicroStrategy as a token on Liquid, tradable token. With Lightning Network having struggles, this cycle might see much more interest in Liquid and Element sidechains. This is the option for scaling Bitcoin that I think is most ready for adoption. All right. And then Grubels, not Grubels, has this here on liquid. Now we have stocks, bonds, promissory notes, stablecoins, BTC, L3 with ARC, and Lightning Swap gateways. And these are all usable peer to peer 24/7. So that is a layer two that's actually having some growth or some interesting things happening, and we can maybe start to see how the future of these things will work out. But all right, guys, that's going to be it for today. I got to run. Thanks for joining me. Make sure you subscribe, sign up for the free newsletter, and subscribe to the YouTube and Rumble wherever you're watching it, and also check out the Telegram t.me/Bitcoin.